So on Twitter, I asked for a bunch of ideas on what you want to learn or just a little more knowledge on or education on. So what we're going to do is I'm going to do quick 5-minute videos that you can kind of scan through and come back to, and they're just going to be very simple, very basic stuff. If you want to drill down into this, we can figure out a way to spend time doing that, but let's keep it basic. As always, subscribe to the channel and click on notifications because things that come out are somewhat timely. Today's video that I loaded on the monthly charts there's some stuff in there that could be actionable this week. So in regards to this, all we're going to do is focus on the moving averages. And I am just going to use simple moving averages. Some people use exponential, but then you're getting involved with an equation. I'm not interested in the equation and who made the equation and the methodology behind it. I just want to look at the data. So everybody trades differently, and if you want to use EMAs versus SMAs, knock yourself out. It really doesn't matter until you're getting into the 50 and the 200 anyway. So let's just start here. This is the daily on FCX, and we're going to jump around this particular stock. But what I want you to understand is there are levels to this. So you have to think about it this way. The price action, right? And let's just get rid of all these lines. The price action, remove everything. Yes, remove everything. So the price action is really what you're looking at. And then these are secondary. But you have to think of them as this is everything. This is the entire, this encompasses everything when you're going to trade. Maybe I'll throw this back in so that you can see this. So I want to say that again. This is your world, right? This is it. And that's how you're focusing on it. I want you to think of them as you own this, and then there are different levels in which you can break, okay? And that's what you're really looking at. There's different levels of support and resistance where you use these lines. But there is strength in these lines, and the strength varies predicated upon the line and the time of the line. So if you're looking for like a 200-day average, okay, and this chart is the Earth, that's a continent, okay? That's how you need to look at it, okay? That's how much mass that involves. If you look at, and that's based upon the 200 points, and then let's just say we're looking at a year, right? You can see where I'm going with this. On the 50, think about that as a country within the continent, right? It's completely affected by this, but it still has significant strength because it's a correlation of the last 50 days, okay? The 21 day, think of as a castle on the country. Does it have relevance? Absolutely. It does not have nearly the significance of the 50 or the 200 day, not even close, okay? And then you have your 8 day, which you kind of think of the outer wall of the castle, and then you have your 5 day, and you can think of that as like a moat. But that should give you kind of a clear picture on the relevance of these lines. And I don't really want to get too specific more than that, but I want to give you a couple things. So you can see how these levels, all these levels matter, and you can see how we're respecting this, right? Or rejecting these lines. And these lines become support and resistance. But take into account who's buying at these levels. The people that are buying on the 5 and the 8 day, they're your day traders. They're the people there's a little pattern here I'm just going to walk you through in a minute, but they're your day traders, okay? No institution is going, oh, across the 5 day, I better get involved, because they can move the stock. They can't turn as fast as a day trader. So the 5 and the 8 are basically for people that are day trading or want to be in it for 1 to 3 days. That's who offers the most value. So on the 21 day, you're basically looking at your smaller funds, and your high net worth kind of guys are looking at this and going, okay, well, if it goes here, I can get in and out of it and I won't get hurt, because there's more stability on the 21 day than there is on the 5 and the 8. Simple enough. If you go to a 50, you're really looking at your buyers being larger institutions, mid to large institutions that are buying and trying to protect that level. They feel safe buying here, so they buy here. And then if we drop down into something like this, that's usually where you'll see the big boys really come in, where you'll see like the very large funds, like your pension funds, like CalPERS and guys like that will step up and try and defend those areas because their time horizons are 5 or 10 years out, and that's a decent spot for them to buy it. So that's a rough idea, and this works on every single kind of chart. So we'll just do the monthly on this real quick, and just again for reference, this is FCX. And what you'll notice here's when we bought it in the letter, here's what it did, and we just got stopped out break even so that we didn't lose any money. But you see how it's respecting this 200 month? These lines work everywhere, and they work on any time frame. So just keep that in mind. So I'll give you this one because it seems to have some active guys, and I'm a fairly active guy, frankly. But there's certain patterns that you have to pay attention to. Okay, see this? This was a clear indication when this 5 and this 8 cross. This was a clear indication that you were going to have people come in, right? And then you see the volume is above average volume. That's fine, but let's stay on the moving averages. You see how we turn here? That's someone's buy signal, okay? A 5-8 crossover is someone's buy signal, okay? Their sell signal is a 5-8 crossover to the downside. So 5 crosses 8 up, 8 crosses 5 down, they're out. Whatever they make, they make. That's a pretty standard way to trade for a couple days. Is it the be-all, end-all? No, it's not, because you could have got blown out here and then it went up here. But when it started to roll, you can see. And you can see how it's respecting these. So that's it. I wanted to keep this short and sweet, but it's very basic what I just walked you through. And if you have questions, message me and I'll try to post more of these short videos.